Looking here, euro dollar, things are clearly bearish. It's been a short the rip position for the last 2 weeks. And so right there, it broke support right over here, broke another one right here, broke another one right here, and it tested the 108 and it broke that again. At this point, all we're looking for is that we're looking for a higher low and some healthy consolidation because we've had this downtrend for a very long time. And as we get over here, we're starting to see that there's some weakness and that there's some consolidation that's starting to happen as it starts to break that trend line. And when we look at this on the 1 day, we're starting to see that the Bollinger Bands have gigantic amounts of historical volatility. And on those Bollinger Bands, with the high amount of historical volatility, we're also seeing lots of implied volatility being priced in, and this is way too much of a high implied move. There has to be some consolidation at this point, and if we look at the CCI, it is deeply oversold, and so just from that perspective, it's been since last May that we got such an oversold position on the CCI, and so just all of that says that there should be some consolidation at some point. So the 1 hour clearly shows that the trend lines are starting to break. And so I think that's a good indication right there. And I think it's going to break and it's going to go higher up until this next resistance. And then from there it's going to be a higher low, and then it's going to start falling right back down. But we need a way in which we can get rid of this oversold status right now, so the bears can have some healthy consolidation rather than going straight down, because then this starts to turn into a situation where if you go straight down, where you're going to have a V-shaped recovery, or if you also go up, you follow the same thing where you keep on going up, 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 and then you run into a blow off top, and then you go pull straight down. So you need healthy consolidation along the way. So it's still a downtrend, but there needs to be healthy consolidation with this downtrend. I think that we're going to face this healthy consolidation, but we have to express our viewpoint in such a way that we won't lose money if there isn't any consolidation, if it's just a short the rip situation where it just keeps on going down and where the trend keeps on going lower and lower. So looking at FXE, right here, this is a good way. You can obviously use futures options, but FXE is what is applicable to most retail traders, and most of them are going to be using FXE. If we look March 6th, that's not too far out. We're going to look for the calls, the 102.50, short that call, and that's going to be a naked call that you short. And then on the other side, on the put side, right here on the 102, we can short that, and then we take a long position on the 101 spot 50. And so this makes it so that we've turned this into a reverse J lizard, where we short at the money call or slightly out of the money call. We use the premium collected from that to go ahead and sell a put vertical spread. And so we're hoping for some sidewaysness for the next coming days and about a week or so. And we're hoping that because it's going to trade sideways, volatility is going to contract, and so we're going to make lots of extrinsic value back from the premiums that we sold. But right now, sidewaysness is the way that we want to go about this. Short a naked put, slightly out of the money, and then slightly out of the money, we want to do a put vertical spread, and we want to make sure that even if it keeps on going lower, we won't lose money, because the width of this put vertical spread is the amount of premium that we collected from the call that we sold. And so looking right here, you had the bid ask, but the bid ask, Yahoo Finance generally doesn't update this very well. But right now, the best price you want to look at is the last price. It's the mid price though, but seeing the FXE is a fairly liquid product, you don't have to worry too much about bid ask spreads. So you're making 57 right there in premium. So even if you sell this, the most you could lose on the put side is 50. So even if it keeps on going lower, the most you could lose is 50, and you collect 57 on the as the last price says. And so even if it keeps on going lower, you don't lose anything. You only start losing money if it goes higher, which I think is unlikely from here. I think it's just going to be consolidation that's going to keep on going lower, as this says right here. So that's what I'm seeing right there. Longer term view though, if we start looking at this on the weekly, from the way that it looks on the weekly, it looks like at some point we're going to have to start getting bullish. It's probably going to be another month and a half, but this looks like a falling wedge as of now. And so because of that, we're going to have to start getting bullish in like a month and a half. But for now, deep bearishness and there has to be some healthy consolidation. The reverse jade lizard is a good way to play it. We can play the sidewaysness that way. And if it still keeps on going lower and we're wrong about the consolidation, we don't lose any money because of that. And we could still make some money even if the price keeps on going lower, lower, and lower. So that's how we want to play this so far. Short a slightly out of the money call option March 6th. So that would be the 102 spot 50 on FXC. And then short the 102 put March 6th, 2020. And long the 101 spot 50 March 6th put 2020. And so doing that, we just create the reverse jade lizard. If it trades sideways, great. That's the best case scenario. But even if it keeps on going down, we still make money, just not as much as we would have made if there was consolidation. Thank you for watching. Until then, I'm going to give updates. So if you want to stay subscribed, turn on the notifications. Go ahead and do that. If this trade goes well, then we're going to give an update as to what to do. If it doesn't, we'll make an adjustment.